Due diligence, a lot of people think, particularly when they're on the sell side, they think that this is a process that is used by the buyer to chip the price, reduce the price, renegotiate the deal once it's been agreed. Actually, from our point of view, that's not at all what the purpose of due diligence is. It's there to understand the business and make sure that we actually want to buy this business. So typically the three forms of due diligence are the legal side. So we're looking at the what the contracts are within the business. This could be employment contracts, it could be contracts with customers, it could be contracts with suppliers, and we're looking for the sort of legal obligations of the business. It's also looking at the constitution of the company. There's then the commercial side, so we're looking at, the way the business operates, its operating model, how it markets itself, almost doing like a SWOT analysis, so looking at the strengths, the weaknesses, the opportunities and the threats for the business. A lot of that, to be honest, is already done pre us actually even agreeing the deal, because there's a lot of information that's out there in the public domain. We can see how it markets itself, we can look on its website, we can speak to the competition, we can get a bit of a feel for what the market size is, and we can see how we fit into all of that. And there's then the financial side of things, which is probably the thing that we hone in on the most, which is really understanding the historic performance of the business, the future potential for the business, cash flow forecasts, and looking at the balance sheet in detail. So what assets and liabilities are we acquiring, and how do we manage all of those things. So due diligence is there for us to understand the business, get a feel for it, so that once we take over, we're going in with our eyes open rather than closed, and understanding what risks, if any, are there that potentially could cause a problem. And then we have to make a decision on that, whether those risks are palatable or not palatable. But it's very rare for us to tie up a deal for it to fall through the due diligence process, because we've done a lot of thorough research before we even get to that point of actually agreeing a deal.